Well, let's talk a little bit about what everybody's talking about, and that is the big, beautiful bill, the BBB here. And, Mike, this is a perfect example. We talk about this all the time. There are 75,000 pages or 100,000 pages in that tax code, and they're constantly changing it. Here's an example of how it has changed again, and we got to keep up with this. What is in this big, beautiful bill that we need to know?
Well, so in general, what I tell people all the time is that everything that you really like about the bill disappears in 3 years roughly, and everything that you dislike about the bill, just like last time, everything you dislike is made permanent. But the fact is there's some really, really cool things in there. I mean, this whole idea of no tax on Social Security, that was such a huge campaign promise that he made, and you know, at the risk of offending some, Trump supporters, it didn't quite work out the way he said or implied it was going to be. But fortunately, he did get passed and increased in the standard deduction for seniors, right? So if you're over 65, your standard deduction went basically for married filing joint from about $31,000. You guys get now an extra $12,000 worth of deduction. So the nice thing about that is that even though it will help a portion of seniors, because realistically from in our practice, we probably only have maybe almost nobody pays tax on Social Security in our practice because of the way we design things.
Yeah, so I mean, one of the big things that we do is we're taking into consideration taxes with all the plans that we're developing. So we're already taking this into consideration when we're developing a plan for our clients, because our goal is to get them to be as tax efficient as possible over their lifetime, and then also for their heirs, so when they pass on money. So we're already taking into consideration in our planning, how do we make you more tax efficient? How do we get you to potentially zero taxes if the only source of income you have coming in retirement is Social Security? How can we make sure that, we set up proper buckets for you so that when you are drawing income from your portfolios, it's from that tax-free bucket of money, and then it's going on the tax return and it's not making Social Security taxable. So we've already been taking this into consideration and into our planning for our clients to be tax efficient, because we know in the future at some point taxes are probably not going to go down. They're going to go up at some point in the future. So if we're planning effectively now for that, when that does happen, we don't care as much, because if you're at zero taxes or we've already made you tax efficient, we're going to be in a specific place to where you're not that worried about the taxes anymore. Because if you are at zero taxes, you're not going to pay taxes on zero. So that's our goal, is to make you tax efficient. So we've already been implementing that into the plan.
And Lawrence, I got to believe that there are some wide-eyed moments when you sit down and start into the tax conversation with people, and people saying, I didn't know that. and you're able to save them money, because this is the place where you guys live in helping people save money on taxes.
Yeah, I mean, one of the biggest things, it is tax planning. And when a lot of the folks that call in from the radio show, one of the biggest things that they talk about and the reasons they reach out to us is because we have that focus on tax planning. They have a current advisor and they do the investment management, really, just putting them in a portfolio, buy and hold strategy. But really, they're not getting that extra step, that tax planning. They're having to play middleman, go out to, talk to their CPA. If they ask their advisor a tax question, they can't answer it. They refer them to the CPA. Then the CPA, they ask an investment question, and it's vice versa and back and forth. With Prostatis, you're getting that one-stop shop where we're really addressing the tax planning, we're addressing the investment management, then we're also learning on the estate planning. So really a holistic financial planning approach where it is truly that one-stop shop where we're handling all those financial needs. We really address everything with a dollar sign behind it. So whether it's real estate, whether it's business sales, we're addressing everything for our clients. And all that comes back to taxes, right? Taxes, taxes, taxes. It's always a big focus of the conversation, is how can I save money on taxes, or how can I pay the least amount legally possible? And that's the goal that we're trying to achieve with our clients. We're having these conversations with them. We will show you an Excel spreadsheet, really an apples to apples comparison to what it looks like on a financial planning standpoint if you don't do any tax planning and just stay with the status quo of what you're currently doing, and what happens if you actually implement a true financial plan and a tax saving strategy, and we put that into place for you. What does that look like? And we'll show an apples to apples comparison. And a lot of times we're saving clients, it can be millions of not, a couple millions of dollars, both over their lifetime, but then we're also showing the savings for what their heirs will inherit and the tax savings to them. Because the last thing we want to do is pay Uncle Sam 30 to 40% of the portfolio over your lifetime going to taxes, and then another possibly 30, 40%, maybe even half of the portfolio that your kids have to pay taxes on just for the right to inherit that money.
And it does beg the question then, because since the bill passed, I think the number one question we're getting coming into the office is, does it still make sense to do Roth conversions? And the reality is the answer is yes. I mean, unless tax rates are going to go down, and if you truly believe tax rates are going to go down, then you shouldn't be doing Roth conversions. But for the bulk of us, the big, bold, beautiful bill, it's not lowering the deficit, right? Now we might become a little bit closer to the annual budget might be a little bit more balanced if they can manage to cut off some of the spending that they're talking about doing. But remember, those spending cuts actually aren't implemented for another 2.5, 3 years. So the spending cuts happen in 3 years from now. They're not happening now. So we're going to see additional deficit increasing. And at some point, the numbers I've seen have been bouncing around, but they either have to raise the taxes by about 5% per person, or they have to lower expenses, spending by about 5%, or a combination thereof. So the fact is that unless you think tax rates are going to go down, it still makes sense to do Roth conversions, because yes, you're paying tax at today's tax rates, but we have this incredible opportunity because it's still, for most of us, at the lowest rates we've ever seen in our lifetimes. And given the fact that Roth conversion rates are so low, given the fact that capital gains rates are so low, given the fact that we have this additional $6,000 per person for retirees over 65, we have an incredible opportunity to mix and match all those pieces to do a couple things. One, continue the conversion process. Like you said, Lawrence, it makes sense to do the conversion process not only with yourself in mind, but if there's going to be money left over, you want to do it so the kids are inheriting it, one, in the most tax efficient manner, but also as quickly and efficiently as possible from an estate point of view. But also what it gives us an opportunity is to create those income streams, right? We can do income streams where we can actually have an incredible opportunity to get you in that 0% tax rate. But to get you there, it starts by picking up the phone and giving us a call at 866-597-1040, 866-597-1040. Sit down with myself, Ryan, Lawrence, the whole team here at Prostatis. We will show you how to create income streams that you will never outlive. We're going to talk to you about fees. We're going to talk to you about long-term care. We're going to talk to you about estate plan. And we're going to talk to you about how much risk. And again and again and again, taxes, taxes, taxes. This is the easiest thing for us to do to attack the tax bill, to keep you in the lowest tax rates possible, which includes zero, and this additional tax cuts that Trump has given us. An incredible opportunity to start now. If you're not already doing this, pick up the phone, give us a call, 866-597-1040.